TCS is going to be in focus today as the investors have been keenly awaiting the much anticipated board meet on the share buyback, which is today. The software giant had announced, remember, a massive 16,000 crore rupee share purchase program just last year, promising to distribute as much as 100% of the free cash flow it generates in a year. So let's chat a little bit about what could be expected. Ravi Menon, analyst IT services at Elara Capital, joins us on the show right now. Ravi, morning. It's been a year since the last buyback, which was a sizable quantum, 16,000 crore rupees. According to you, what could be the price and size this year, given that the promoter participation will also be likely?
Yeah, I think that they wouldn't have to offer a pretty decent premium. So we are looking at between 1950 to 2,000 rupees being the buyback price, and we think this will help improve ROEs even further. So they already have the leading ROEs within the India Tier 1 at nearly 29 to 30%, and we think this will go up to about 31.5 to 32% post this buyback. And we are expecting 12,000 to 15,000 crores being the buyback quantum.
That's what the market is working with as well, Ravi. But if it's likely to be a tender buyback at a small premium, since the stock has already rallied close to 40% from a year-to-date perspective, is it largely going to be net neutral on EPS, but could improve return on equity by a bit? What have you penciled in?
So we are looking at not a very modest premium. We're looking at about a 10% premium of sorts, because I think between the announcement and when the shares actually get tendered, there could be a gap and shares could rally further from here. So I think for the buyback to be effective, and you have the 12-month window for SEBI, then you can't do two buybacks back to back. So for that to be effective, I think they will have to have a decent premium.
At the current price, what return are you expecting from TCS over a one-year period compared to some of its Tier 1 peers?
We are actually still revising for the new rupee assumptions, but I think that we will have something close to the buyback price. So closer to 2,000 rupees is I think where we should end up in 12 months from now.
Ravi, IT is the flavor of the season, so I have to ask you beyond TCS as well. What is it that you think are going to be the big performers in the next 6 months to about 1 year across large and mid caps?
So we think that mid caps have rallied so hard now. I think it's really difficult to see further triggers there. Among the large caps, I think we've not really got the new rupee factored in. So we're positive about TCS, HCL Tech, and Wipro in that order. Infosys, we think there's still some headwinds there, and probably next year they might actually do a lot better. Tech Mahindra, we think there is it's already moved up so much, and we're still a little uncertain about the prospects that they have from 5G. That seems to be one people are factoring in into. But we don't see that clear visibility yet.
Ravi, we'll let you go at that. Thanks very much for taking out the time and summing up your own expectations. So Ravi sees a decent premium to attract investors to the buyback, and of course he sees the return ratio is also improving on account of this cash flow sponsored buyback going through.